Hi there, welcome to Kneppy Invest and welcome to August 23rd, 2024. We have about 1.5 hours left of trading today. That also includes a closing auction. And overall, today's been a little bit down, particularly small caps and resources. Not surprised about mining because I did have a look at iron ore and that was down for the day. So hence, we're going to see a bit of weakness in Fortescue, BHP, Rio Tinto, more than likely. Little bit surprised to see tech up because Nasdaq was down by over 1% overnight. That was the end of a fairly significant rally, long-term rally, maybe 10, 11 days up in a row for the Nasdaq. Dow Jones was not down all that much, so I expected a little bit more weakness in tech and a little bit more strength in maybe some of those blue chip financial companies, those sort of things. So we have a look at the sectors, indices, and best performing companies and worst performing companies in a second or so. Now, we are moving into the final week of August next week, and I'm sort of looking forward to it because the amount of results we do see, eventually I just get sick of it. I do get sick of it after a while because I haven't really gone through many results so far. In fact, yesterday or last night, I did go through Telix Pharmaceuticals results because they did release it towards about 5 p.m., I think. So I did find a little bit of time to go through the results. I liked it. The market didn't. Share price fell a little bit today. We'll have a look at TLX later in the video. And the other thing I actually did, I just noticed, you probably noticed this as well, if you're in Brisbane, a little bit of moisture, a little bit of humidity in the morning. This time of year, it is unusual. This is the driest part of the year, August and September. So you can have those really dry mornings, cool to cold mornings, and usually this time of year it warms up quite nicely. I had a look at the forecast next week, the last week of August, and I was a little bit surprised to see quite a few 30s on the Brisbane forecast, and that is unusual. So Brisbane forecasting, or they're forecasting 29 for Sunday, 30 for Monday, Tuesday, Wednesday, and 32 for Thursday. That is unusual because if I remember correctly, on average, we see one day at or above 30 every 3 years, or could be 5 years or so. So an extended period of higher than average temperatures in Brisbane. Even today, it's quite nice and warm out there. And the other thing you might notice, if you have a look at the dew points here, we are seeing fairly high dew points along the coast. For instance, Double Island Point at 18.8. That is unusual for this time of year. If you go inland towards Oakey and Toowoomba, they're negative dew points, and that is sort of usual. So that's the reason why we're seeing a fair bit of fog near the coast, not as much fog inland. Anyway, interesting time of the year. I like this time of year when it comes to investing. Also, the climate. We're transitioning from the winter months into spring and summer, and typically spring tends to be the best storm season or period of the year by far, and that is true for a lot of places in the world. Now, this is not a meteorology video. This is about the market. So what I'm going to do today is I'll go through the ASX today, as I usually do, best and worst performing sectors, indices, and also companies. And I do have a top 5 stocks of the day. Now, some of these companies are down big on the release of their results. Now, I didn't understand why. So what I did is I just Googled the names of these companies, and I discovered an interesting website called Capital Brief. So I'm going to actually use Capital Brief to help explain why some of these companies' share prices are down. Now, the company that comes in number 1, the top stock of the day, released a positive trading update today, and I'm also trading this company, so it just had to come in at number 1. And the other company that is in the top 5 stocks, share price is up a fair bit today. It's not my favorite company. In fact, I don't have much time for this company at all. But again, the whole point of me doing this channel, they're doing these videos, is to share ideas with you. So just because I may not like the company doesn't mean you don't have to like it. And that company is actually Mayne Pharma. Last time I looked, the share price was up a fair bit on their results, which is a little bit surprised because the market was hating this company. Oh, it was up 10%. I'm pretty sure it was up a little bit more than that. Yeah, share price at one point today was up at $4.79. So this share price could have been up as much as 20% at one point today. So a little bit of selling, and you can just see the chart there. And if you know anything about chart, resistance, supply, you'll know why there's been a little bit of pressure on the Mayne Pharma share price. But I'll talk about that company later in the video. And those companies that did not make it in top 5, I will discuss some of those. Not many, nowhere near as many as the last 2 days. But I do want to discuss a few of those companies, including a company that has gone into voluntary administration. No tweets, so let's get stuck into it. Let's have a look at the ASX today. And overall, down, negative, except for tech. I'm just going to update this because I don't think it updates manually, automatically. Yeah, even tech's now down. So a little bit of weakness in the markets in the last, well, since I started talking. Tech went from being up slightly to now being down. So let's have a look at the indices and sectors. Although tech has rallied, it opened up pretty much down, and for some reason has rallied during the day. I'm not sure. I understand why it was down fairly big on open, because the Nasdaq was down. So I'm not sure what's happening with tech. It could be just WiseTech. It could be as simple as that. Telecommunications had a good day today, so I'm assuming Telstra has had a good day. Real estate, a good day as well. Maybe Goodman Group's had a good day. CSL maybe has had a good day because healthcare is up. I don't think Fisher & Paykel is in the ASX 20. I don't think it is, and I'm giving away top stock of the day. And the worst performing sectors, not a surprise, materials, energy. Well, utilities is a little bit of a surprise. I'm going to just open up utilities. Why is utilities down big? I do like the sectors because they give us a list of all the companies, so we can see why. In fact, the top 5 companies in utilities by market are all down. Origin Energy, APA Group, Mercury, New Zealand, AGL, and Meridian Energy. In fact, there's not much green there. Fluence Corporation is green or up, but the market cap of that company is fairly low. Okay. But again, not surprised to see materials and energy there as well. ASX 20 is down 0.15%. Now, based off what I see here, I'm going to say Telstra's up, Goodman Group's up, CSL's up. I will probably also say that the iron ore companies are down. More than likely, Woodside down, Santos down. I was going to say WiseTech might be up, but I'm going to say WiseTech is down. So let's have a look at the ASX 20, see how right I am. I'm going to say 8 companies up, 12 down. 10 up, 10 down. Wow, there you go. So let's have a look at the companies up. We have Goodman Group, Telstra, Wesfarmers, Woolworths, Macquarie Group, Transurban, Coles Group, and there's WiseTech. It is up today. And there's CSL. I was wanting to see CSL there. Now let's have a look at the worst performing companies. I did see ANZ. And I wasn't going to talk about ANZ, but I might just mention it if I remember. But there we have, just behind ANZ, we have Rio Tinto, Fortescue, and BHP. And you also see Woodside Energy there as well. Banks have not had a good day either. There we go. All banks are all down today. There's Brambles. A couple of really good days in a row for Brambles. Now it's down, which is understandable. Okay, so let's get to the best and worst performing companies on the ASX, starting with the best or the top gainers, which is now what I'm calling it. A company called Bioxen is up 71.43% on okay volume. I'm just going to open up and see what happened here. I actually did notice this company released something yesterday or the day before in regards to cannabis gummies, and I did find that huge, cannabis gummies, and I'm not sure that's why the share price is higher today. I doubt it, because I'm pretty sure that was yesterday, the 21st. That was 2 days ago. Bioxen manufactures first pharmaceutical cannabis gummies. They've gone into a trading hold at 1:18 p.m. More than likely, that trading hold, you can see a pause in trading. So you'll see a pause in trading when the market is open. You don't see the pause in trading when the market is closed. Now, although that's a little bit of a lie, you will see the pause in trading from about 10 to 15 minutes before the market opens, but not before that, and not when the market is closed after 4:10 p.m. That's just telling us that there is a trading halt coming soon, but don't know when that's going to be. That was an hour and a half ago. And more than likely, that pause in trading or the trading halt is because of what the share price is doing today. It's rallying on pretty good volume. So if you have a look at the chart for Bioxen, and in fact, I was looking at this before I started recording because I was a little bit surprised to see the share price up so much. Yeah, for some reason, don't know. Who knows? Huge volume coming in today. And when I say huge volume, just look at the volume today compared to history. Not only that, if you go through this particular history of Bioxin, which goes back to April 2023, you know it's very limited, very small volume from April last year all the way through to April this year. We've started to see the volume increase from April of May or May. Now, the share price was getting fairly low, down to 0.4 cents. So that could be a byproduct of that. But there has been a little bit of an increase in interest in this company. And maybe this increase in interest could be simply a little bit of, I was going to say something pretty bad about social media. Maybe that's all it is. Someone on social media was just talking about Bioxin and how they're selling cannabis gummies. That's sometimes all it can take. But I will have a look at their reasoning behind why the share price might be rallying today. Okay, so that's Bioxin. Don't really need to linger on that company anymore. Other than Bioxin, some of these other companies are trading on fairly low volume. White Energy, a company I've never heard of before. Iltani Resources, a company I've never heard of before. Holistic Goldtech, I have heard of that company. It's been around for a while, but I'll move on to Arawara Resources. Paincheck, I have heard of Paincheck. And then we get into a couple of companies who are have seen their share price increase on pretty big volume. Elixir Energy and LTR Pharma. I have mentioned LTR Pharma a few times before. So let's have a look at these two companies. So Elixir Energy have released an announcement today. Taroom Trough coals flowed for first time. Okay, so they have released something that has excited the market. I'm just going to open up or look at the chart. EXR. Is this a potential breakout? That's what I'm looking for, potential breakouts. And this is a potential breakout. In fact, the first sign of a breakout was back on the 5th of April. Share price of this company rallied 26.76% of that day. And since then, share price has not been lower. So that was a breakout. That was a definition of breakout. Look at the volume. More than likely, they released something positive on that day. Share price went on a rally, pulled back. But on the pullback, the share price did not get lower than on the 5th of April. And even the second pullback was higher than the first pullback. And then today, beautiful volume. Share price has gotten to a new high. So many things going for Elixir Energy. And this is just by me looking at the chart. That's it. Don't even have this company on any of my watch lists. I think it deserves. I'm going to put it into my high volume spec. So that's Elixir. And the other one was LTR Pharma. They must have released something today. Surely, let's have a look. No, they haven't. So I would say this is a little bit of noise. And maybe there's a bit of volatility in this company. So let's have a look at the chart for LTR Pharma. Oh, the share price this is a really nice looking chart. Nice looking chart, nice volume. Really the breakout occurred probably back in May or June. Their share price going sideways after they listed. And all of a sudden, we started to see the volume increase. Share price went on a rally. Share price then went sideways for about 2 or 3 months. And it broke out again on the 13th of August, which is not that long ago, 10 days ago. And then after that breakout, share price went sideways for about 5 days. In fact, 6 days. That's another good sign. And no selling. I love that signal when the share, after a nice little rally, 2-day rally, share prices go sideways. So there is going to be a little bit of selling, but there's enough buying that counteracts any selling. What you don't want to see is a massive plunge in the share price. So a good looking chart for LTR Pharma. Anything else here? Nothing. So no, the company is releasing results. Okay. So let's have a look by market cap, and hopefully there is Fisher & Paykel. Yeah, the top stock of the day. Share price up 10.5%. They did release my favorite type of announcement, a profit upgrade. Yes, a profit upgrade. They should have put that in the title of the announcement. That's my one little suggestion to the company. All they mentioned was a trading update. It could be anything. So for me, who is trading at Fisher & Paykel, I would prefer not to have a heart attack before I open up the announcement. Mayne Pharma up 10.91%. Company came in at number 5 on the top stocks of the day. I'll talk about that in a second. We've also seen positive reactions or positive share price action from or for, not from, for electro-optic systems. Step One Clothing. Appen has had another good day. Nido Education, Findy, Colsol has bounced after a down day yesterday. Not sure what caused that. Closer Loeb, and I'm looking for any other companies who release results. Nothing. So it's really only Mayne Pharma, and that is in the top 5 stocks of the day. Okay, so let's get to the worst performing companies. And again, well, I was going to say, again, we have a few companies here who are fairly small, Panther Metals and Cluey, but then we get to Inghams Group, down almost 20%. So Grady Wolf, who pretty sure she was with Bell Direct, they are quite bullish on Inghams, and I wonder if they've changed its tune. Down 19.5% on the release of their financial results, and that company is definitely in my top 5 stocks. In fact, it comes in number 2. And just behind Ingham, we have Jumbo Interactive coming in number 3, down 17.14%. And just behind Jumbo Interactive, we have Accent Group coming in number 4. Share price of that company is down 14.46%. And this is an occasion where the market got it completely wrong. And you'll see that when we look at the chart. Harmoney, down 14%. They released results. And that's it. Big River released results. Was it yesterday or the day before? A market didn't like that. Share price down again. And that's it. Let's have a look by market cap just to see if I haven't missed anything. Spark New Zealand released results down. We'll have a look at that company as well. Whitehaven Coal, did they release results or was that yesterday? I think it was released yesterday. Fletcher Building, I don't remember them releasing any results. EQT released results yesterday or the day before. Grange Resources, that's iron ore. Playside Studios did release results. I do want to talk about that company. And that I originally put Playside Studios at number 5, and then I saw Mayne Pharma share price up by about 10%. So I thought that's probably, and since the other 3 companies, Inghams, Jumbo, and Accent Group, were all down fairly big, I thought I should put a little positivity in the top 5 stocks today. So I decided to replace Playside Studios with Mayne Pharma, but Playside Studios is down. No other company here that released results. Bisalloy Steel, if I have time, I'm going to have a little chart for that company. Someone made the point the other day, I read somewhere, well, why is Bisalloy Steel dropping like a rock because of weakness in the steel market? But what's that Blue Scope Steel's not? So let's have a look at Blue Scope Steel as well. What is Blue Scope Steel's ticker code? I was going to say BLS. Blue Scope BSL. Yeah, of course. So have a look at those charts towards the end of the video if I have time. And there's Laserbond. Laserbond released results today as well, and share price is down. Okay, so let's get to the top 5 stocks of the day. And we'll start off with number 5, Mayne Pharma. Mayne Pharma. MYX. Share price up 10.41%. I was going to show you this. So I discovered Capital Brief today. I just Googled some stuff, and Capital Brief came up like 2 or 3 times. And I noticed on the right-hand side, there's all these stories. Not sure if you have to pay for this. So I clicked on some of these stories and didn't have to pay for it. And it gives you a really good rundown of what's happened with these companies, why they're down. So, for instance, Fletcher Building shares tumble on fresh regulatory trouble. Had no idea. Polynovo shares lower as profit jump falls short of estimates. I had no idea Polynovo released results. So that must have been after market had opened. Telix Pharmaceuticals shares stumble despite strong first half turnaround. And then we got all these, everything here. I didn't see Mayne Pharma here though. There we are. Fisher Paykel upgrades profits guidance. There's Inghams Group. I don't know if there is a search button here. I'm just trying to find a search button and I can't find it. I have no idea where Capital Brief comes from, but I'm going to sign up as well. Anyway, I'll talk about this site a little bit later because I do have a couple of articles looking at Jumbo Interactive and Accent Group that I did like. So I'll show you those when I talk about those 2 companies. But Mayne Pharma, what I could do is just Google Mayne Pharma, Capital Brief, see if anything pops up. Nothing. Maybe I have to go to news. Nothing. Nothing. Okay. So let's have a look at Mayne Pharma's results. Now, I did have a really quick look at these, and then I moved on because I went, meh. I was like, ugh. And when on the surface, these numbers look pretty bad. Now, they do mention significant improvement in operating and financial performance, with reported revenue up 112%. That is nice to see revenue up a fair bit. Underlying EBITDA improved by 118.2 million. With operating cash flow from continuing operations of 8.1 million, which might seem okay, but this company has a markup of, what is it? It must be 500 million, something like that, maybe 300 million now. Share price has dropped a fair bit. Yeah, 368 million. Share price has dropped a fair bit over the last month or two. So some of these numbers look okay, but a fair bit of losses here. Reported loss after tax of 168.6 million. Last year was 317.4 million. And even though underlying EBITDA is 22.9 million, reported EBITDA $92.5 million loss. Reported gross profits at 218.8 million. So a lot of really nice up numbers here. But this company has just continually unimpressed over the past 7, 8, maybe even 10 years. You'll be able to see that when we look at the chart. But the market did see something in these results that it liked. It could have been an outlook. Let's have a look at any outlook if they did give. The company expects to improve shareholder value in financial year 25 through growth in underlying EBITDA, but they don't give any numbers. They're just saying we expect to do this. So it remains to be seen if they achieve what they expect to do. Again, this company has continually disappointed me, and I think the market as well. So this company sells drugs, but they used to be, I'm pretty sure they've changed their business model and they're focused on women's drugs. I could be wrong with that. So I'm just going to have a look at their about section. Specialty pharmaceutical company focused on commercializing novel pharmaceuticals, offering patients better, safe, and more accessible medicines. Mayne Pharma is a leader in dermatology and women's health in the United States. Yes. So they have sort of, I wouldn't say transitioned, but they have pivoted into dermatology and women's health. And maybe there is signs that that pivot is going to do fairly well in the next few years. I don't know. So let's have a look at the chart for Mayne Pharma. And to be honest with you, the only reason this company is in the top 5 stocks today is because the share price is up 10%. And most other companies' share price are not up 10%. In fact, this was the best performing company who did release results today. But even then, if you look at this particular chart, I would not be interested in this company at all. In fact, the share price went to $7.40 in May, and then it almost halved from May through to August. I forget exactly why, but there was something negative back in middle of May. You can see the share price took a big tumble in 2 consecutive days, down 5.8% and 8.4% on the 14th and 15th of May, and the share price just kept on dropping. And even today, so share price has rallied, but the share price was at these levels at the start of August, so not that long ago. And there has been a little bit of selling pressure on the shares today because the share price got to about $4.80, which is understandable because all these shareholders, all the people, all the investors, traders who bought between November and July, so we're talking about, what's that? We're talking about an 8-month period, bought at higher prices, and they want to get out of this dog stock. What they see is the share price rallying today. I think it was up over 20% when it got to 480. They see the share price rallying and they go, "Ooh, I've got my opportunity to sell." So we do see enhanced selling pressure on the shares. And to counteract that enhanced selling pressure, you need enthusiastic buyers. You need buyers who look at results and go, "Whoa, these are pretty good results." And I don't think we have had enough of those enthusiastic buyers. Good volume coming in today. And the reason I say we haven't had enough buyers is because the share price has fallen a fair bit, fallen by over 10% from the peak, 48 cents. Not quite 10%. We'll say 9%. I just did very quick maths. Anyway, it just deserves a spot in the top 5 stocks because the share price is up 10%. And I needed a good news story apart from Fisher and Paykel in the top 5. And Fisher Paykel, I'm a little bit biased because I am trading that company right now. Okay, so let's get to the company coming in at number 4, Accent Group. I think the market got this one wrong. Down 14.3%. I'll show you why I think the market got it wrong. I'm not even going to open up the results. So I would the numbers were down pretty big. But again, it's how do the numbers compared to expectations or consensus from the analysis, and what about the outlook? Those are the two important things. It's not the numbers itself. Have a look at JB Hi-Fi. Their numbers were down, I think, but still the share price rallied because they were better than expected. So here is Capital Brief. I like the way they set this out as well. So I'm just so happy that I discovered this. They're talking about the news, the numbers, the contexts, and then they have another article just behind that. Accent Group shares slump after lower than expected profit. So that means what the numbers they did reveal to the market were a little bit lower than expected, hence the drop in share price. Now, they don't mention any sort of guidance here, I believe. I don't believe there's any sort of guidance. And then we have the news has reported lower than expected full-year profit despite lifting sales in a challenging consumer environment. I am just going to open up the announcement, the media release, and have a look to see if they do have any sort of outlook statement. I wouldn't be surprised to see them mention there is a trading update. Yeah, I wouldn't be surprised to see a bit of a trading update. So total sales for the first 7 weeks are up 8.7 to last year. Like-for-like retail sales up 3.5%. And Agostinelli, the CEO, I suppose, I presume, I am very pleased with trade in the opening weeks of financial year 25. And to be honest with you, if I saw that trading update and I had to predict what the share price would do on open, I would have thought maybe the share price would be up. And that's just me being ignorant of the fact that the results were short of expectations. Sometimes, even if the results are short of expectations, the outlook period or any sort of trading update can counteract any sort of negative reaction. We actually see that a lot on the American markets, the NASDAQ and the New York Stock Exchange. Results might be short of expectations, but they give a really bullish outlook and the share price would pop up. But not true for Accent Group. Okay, so let's have a look at the chart. So why am I saying the market got this wrong? And the market doesn't usually get it wrong. So share price of Accent Group was rallying. So it broke out around about towards the middle of July. See a really big update on the 18th of July. Share price went up 10.2% on pretty big volume. I'm wondering, did the company release anything on the day? 18th of July? We need to trading update. So the company actually released a trading update. In fact, we can see, I'm surprised, they released a trading update on the 18th of July. The share price, the market loved it, share price up 10%. They released the results on the 23rd of August. So there shouldn't be much difference between the results and the trading update. So it's really about the outlook. Maybe they did have a financial year 25 outlook in the trading update and they fell short. So what I'm going to do is have a look at the trading update and look at the numbers. They're expecting EBIT to be between 109 and 111 million. And let's have a look at the numbers they actually hit. EBIT of 110.4 million. So it's right in the middle of their expected range. Profit after tax of 59.5. Do they mention that? Any profit here? No. Okay, so this is a little bit confusing. It seems like they hit their targets according to this trading update, and it could be just the analysis had higher expectations. It's a weird one. I do think this is a weird one. Anyway, Accent Group, share price down. Now it's back to where, what are you doing? Share price is now back down to where it was on the day they did release that trading update. And you can just see leading up to this trading update, I think the market was expecting some really good numbers and a really good reaction from the market because the share price, in fact, yesterday increased 5.7%. And I saw this and I went, oh, this is a potential breakout. But no, today has put an end to that potential breakout. In fact, the volume today is a little bit lower or a little bit higher than yesterday. So a little bit more bullish or bearishness in today's market reaction. Okay, so that's Accent Group. Coming in number 4. Coming in at number 3, Jumbo Interactive, down 17.4%. This was another one. If you look at the results, you go, oh, share price should be higher. But again, this is just looking at the numbers in isolation. And that's a dangerous thing to do. You don't want to react just based off the numbers unless you do know the expectations of the company. So have a look at these numbers. Financial year 24 performance highlights. So total transaction value up 23.7%, revenue up 34.2%, underlying EBITDA up 30%, underlying EPSA up 31.4%, fully franked full year ordinary dividend up 26.7%. So I thought, oh, okay, maybe the market would like these results. That's pretty good growth. I thought probably the market didn't expect this sort of growth. Could be wrong. And then I saw the share price down a fair bit. So again, I just Googled it, saw this little article on Capital Brief. The title sounds okay. Jumbo Interactive tops estimates as financial year profit jumps 39%. So tops estimates. So they actually did, I wouldn't say beat estimates, but they did fairly well in the financial year 24 numbers, which means straight away, that says to me that more than likely it's based off this share price decrease is based off any sort of outlook the company gave. So let's have a look at what Capital Brief says. In fact, Jumbo reported NPATA of 46.4 million ahead of consensus estimates of 44.7 million. So based off that, the share price should have been up today. So let's have a look to see why the share price is down. And it's found in the fourth paragraph. Jumbo's financial year 25 outlook was softer than consensus, forecasting an EBITDA margin of 46 to 48% compared to 48.1% in financial year 24 and 48.9% expected by analysis. So this just shows you the power of any sort of outlook the company gives, any sort of guidance. It can overwhelm the share price. That's exactly what has happened to Jumbo Interactive today. It's just the outlook has softer, weaker than expected, share price down 20%. And the reason behind that, just think about it. So what they do is they put the new numbers based off the company's guidance into their valuation machine, and valuation machine spits out lower numbers. So there could be some downgrades from analysis over the next few days. Okay, so let's have a look at the chart for Jumbo Interactive. This one is an interesting one, not so much today, although, geez, the share price it opened up 16, is that right? It opened at $16, and that was the high of the day, and has just fallen all through the day. Just imagine you bought on open at $16. Now, it could have been GX. No, it opened at $16. That's insane. Share price opened at $16. I just noticed it got to $15 really quick. $15, there it is, at 10.07. It opened at 10.04. So in 3 minutes, share price went from $16 to $15. That is the very definition of enthusiastic sellers. They just have to get out. Sell, 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 sell a market. Got to sell, got to sell. And there's just not enough buyers to meet that enthusiasm. That's why the share price plunges when this happens. Just enthusiasm of the sellers. And this is an interesting one because when they released their results in February, there was a positive reaction from the market. Share price up 9% on that day. This was a case where I was thinking, oh, this is a breakout. But this particular breakout failed. Share price reached a high about 6 days later and pulled back. So I remember not buying shares in this and going, oh, should I buy shares? This looks like a breakout. But no, that was a good decision in hindsight. And now the share price, ooh. This is why I like looking at charts. So back in December last year, also January, share price got down to $13 or $13.20. You can see it. Beautiful. In fact, maybe even further than that. No. So that low in the share price is pretty important. And where is the share price right now? It's right on those lows, right on it. In fact, the share price has fallen briefly below those lows, and we have seen a little bit of a bounce. Not a lot, but a little bit of a bounce. In fact, let's have a look at the 1 minute chart. You see the massive selling in the first minute. Yeah, first few minutes just plunged. And yes, the share price has fallen all through the day. And then at 2:34 p.m., share price fell through $13.20. So there was a big dump on market. This would have been a dump. And then the share price has risen, and about 10 minutes later, it rallied back up above $13.20. So $13.20 or around that level is very important for Jumbo Interactive. Would I buy shares just based off that? Probably not. Share price is now below it. I think there's a little bit more weakness or potential weakness in Jumbo Interactive. But if you are a big, I was going to say lover or supporter of resistance and support zones, this is a possibility for you when it comes to Jumbo Interactive. And maybe there's also value in this company right now. Maybe it was overvalued before, now it's fairly valued, or maybe it was fairly valued before and now it's undervalued. I don't know, because I don't really follow this company all too closely. So that's Jumbo Interactive. Now let's have a look at Ingham. Maybe Jumbo should have been number 2. No, Ingham's Group down 20%. This belongs in the number 2 position. If you're down 20% on results, yes, absolutely. Okay. And this is another case where Inghams is here. Here it is. Inghams Group reports profit jump but misses forecasts. So again, a most important thing is how do the results compared to a consensus, we'll say, or expectations or guidance, and what is the outlook for the new financial year if they have one. Not all companies give an outlook or any sort of guidance. So in Inghams Group, the numbers miss forecasts. So let's have a look. So they reported profit of 101.5 million, up 68%. So again, you see the amount of profit is up, and you go, oh, this is a fantastic year for Inghams Group. And I have actually heard this before. People saying, why is the share price down when the numbers are up? It's not about the numbers. So profit up 68%, but short of consensus estimates of 108.5 million. Now, you might be saying right now, well, it's only a small miss of estimates, only $7 million. It's not that much. It's not worth 20%. Yep, it is worth 20%. You could even say that the market overreacts in occasions like this. And I just saw here, and looks like there's a bit of weakness in the outlook as well. Inghams expects poultry volume growth to lower 1 to 3% in financial year 25. Core poultry volume is forecast to be lower, and I think possibly that has not helped when it comes to share price of Inghams today. I just love this website, although I've just discovered it today, so I might not love it after a week or two. Anyway, Inghams Group. And I'm not really sure if you have to pay, so that's the other thing. And I'm not a AFR subscriber either. All right, so this is a 1-minute chart for Inghams, and the share price dropped a fair bit on open, continued to drop, found its low at about 11:30 a.m. at $3.05, so not much higher than it is now. But if you have a look at the daily chart, yeah, this looks pretty bad. Share price was, look at this. So look at this on August last year. So massive difference between August last year and August this year. So August last year, there was a breakout. This is a definition of breakout. So share price on the 17th of August rallied 14.75%. You could have bought on that day at $3.20. Funny enough, share price is now lower. And then the share price went all the way up to $4.50. And then you probably should have sold on their half-year results, because on the 16th of February, share price dropped 12.5%. So that's not a good sign. Since then, the share price has been going sideways and now bad results. So we are talking about a 1-year low for Inghams Group's share price. And this looks fairly weak. Not only that, massive volume. Look at the volume today compared to last August or even the February results. Huge volume today. So there's a lot of turnover. And again, there's more enthusiasm from the sellers than there is from the buyers. So what you want to see is, you want to see the enthusiasm of the buyers starting to increase when the share price gets to a level. So you might be seeing value investors seeing some value in Inghams Group. And that's when you see the enthusiasm of the buyers starting to increase and they start to overwhelm the sellers. And that's when the share price starts to go up. It may not do that for a while, may not do that ever, but that's what you want to see. So that's Inghams Group coming in at number 2. And the stock of the day has to be Fisher & Paykel. I am a little bit biased. I took a trading position in this company, was it 6 months ago? It wasn't based off any announcement. It was just the chart started looking pretty good. And I went, okay. And there is a feeling, I do have this thought, that a company whose share price is an uptrend is less likely to release a negative announcement, more likely to release positive announcements, and it doesn't always happen. I wouldn't say that is foolproof, but I have noticed it happens way more when a company whose share price is an uptrend, they tend to release positive announcements. And on the flip side, when a company's share price is in a downtrend, they're more likely to release negative announcements. Again, the market as a whole, collective, is pretty savvy and smart. So Fisher Paykel Healthcare did release a trading update today. Actually, they called it profit guidance. I would like them to change the name, the title of this, to profit upgrade. I don't care the guidance bit, but all you need is profit upgrade. You put that title into the announcement and you stop a lot of people having heart attacks. I'm being a little bit dramatic there. But this was a profit upgrade, and it's in the numbers. So we don't have to really go through why, unless you want me to. And it's pretty good. And they're talking about gross margins improvements. And that's actually quite important. Gross margin improvement initiatives are progressing well. The main crux of this particular announcement is found in the 5th paragraph right here. They also gave, was it that paragraph? Which paragraph? Where's the numbers? Where is, oh, here it is, yeah. It's actually in the outlook for the financial year 25, and it's in the 2nd paragraph of that. That's where the real numbers are. Okay, so previously this company was forecasting profit after tax, so real profit, NPAT. That's, in fact, what I want to see. So they were expecting profit to be between 310 and 360 million. Now they expect profit to be between 320 and 370 million. So this is technically a real profit upgrade because they're upgrading profit. Funny enough, they're not expecting any change in revenue. So they're maintaining their revenue guidance at the same levels, between 1.9 and $2 billion. So that's where margins come into play. So if you can improve margins, become more efficient in your operations, that's how you can improve the profit without improving the revenue. I would prefer and do prefer revenues to be increasing because that's how you grow over the long term, because margins can only increase so far, or margin expansion can only increase so far to 100%, and no company is going to have margins of 100%. Anyway, so that's Fisher and Paykel. So let's have a look at the chart. I'll show you why exactly I took a position in this company. It might have been a little bit premature. There's me taking a position at $24. And the whole reason I took a position there, it broke out above $23.50. These highs back in February. And then I took a position at $24 on the 22nd of March. And you notice the share price dipped back almost immediately. That's okay. That's okay, because I knew this could have been the beginning of a nice uptrend. I could have timed that a little bit better, but the share price has just kept on increasing. And look at it. So again, you're playing the odds here. The share price of a company is in an uptrend. They're more likely to release positive news. And if you buy before they release the positive news, of course, you're going to get the double banger. You're going to be already in the company, and then you're going to get the share price rising 10% in one day. The only negative I might think of, I probably would like to see higher volume. But I am nitpicking if I say that's the only thing I don't care about. So would like to see higher volume. Okay, so that is the top stock of the day. Fisher Paykel did release one of my favorite, if not my favorite, type of announcement of profit upgrade. A few other companies I want to talk about. Polynovo, yeah, I saw that thing in Capital Brief. Polynovo share price is up. They released results at 11:32. Oh, actually, they released it at 10:11 a.m. Yes, I was away from the computer at that point, so I have not had a look at these numbers. But again, the share price is not down. According to Capital Brief, I thought the share price would be down. It's not. So the market doesn't care. Okay, so a few other companies the market has cared. I'll just look at the chart for these companies. So Spark. And this is another case where the market got it right. So share price has been a downtrend for a while. There's a little bit of a rally in the share price, but that's probably value investors who don't know what they're doing. They see some value in Spark New Zealand. They disagree with the more savvy investors who are saying, ooh, I'm a bit wary of this company. I think they might release some bad numbers. I'm going to get out. They put a pressure on the share price. Value investors say, oh, there's value here. And they don't really see anything. And today the share price is down about 6% and not a good looking chart for Spark New Zealand. Even if you look at the weekly chart, it's starting to look weak. It's looked strong since 2014. So 10-year period, Spark New Zealand chart looks pretty good. It's a long-term uptrend. And now it's looking weak. So the weekly chart hasn't looked this weak since probably after the GFC. Yeah, during the GFC. So this is the weakest Spark New Zealand has looked, or the chart has looked, for a long time. So Spark New Zealand, Playside Studios could have come in number 5, very close to coming in number 5. This is a case where the market, I think the market was expecting some weak numbers. Now, if you do have a look at the results for Playside Studios, just the yearly results, you might go, ooh, these are pretty good numbers. But I would recommend having a look at the breakdown of their first half year numbers to the second half year numbers, and you'll see significant decreases in all the financial metrics in the second half of the year. Now, they did mention this was going to happen, so it's not a surprise. That's my one problem with Playside Studios is I think the financial performance of the company is going to be quite lumpy over time. I wasn't sure how the market was going to react, and I think even the market wasn't sure because we have seen share price be quite volatile today. And I'll have a look at the 1 minute chart for Playside. Yeah, share price went to a low of 54 cents at about 11:30, and share price has rallied since then. So the market not quite sure what to make out of Playside Studios. I think the results are fine, and I am in this company, and have shares in this company for the longer term. If I was trading this company, I probably would have been out probably in July. There's a little bit of weakness. We saw the share price go sideways. They did release a trading update on the 20th of May, which was positive, but the market didn't see it that way. And then we really saw some weakness in the chart during July. So I would have been out July, but I'm holding these shares in this company for the long term. Telix Pharmaceuticals, there's nothing much to say about this. No, that's the wrong ticker code. They released their results last night, had a close look. I didn't see anything wrong. Share price is down 4%. It was down by a little bit more. There's nothing really to talk about. Telix Pharmaceuticals share price is a beautiful uptrend. I would like to see the share price get above $21, that sort of thing. So nothing to complain about. And really, who knows? And look at the volume. Volume it's a little bit higher than usual, particularly over the last 2 weeks, but we saw some more significant volume days in July. That's Telix Pharmaceuticals. Bank of Queensland. I missed this yesterday completely. Bank of Queensland share price just plunged yesterday, down 7%. It's like, what the hell happened here? And then I just noticed when I was looking at Capital Brief, where was it? I'm pretty sure I saw Bank of Queensland somewhere here. Look at this. There it is. Bank of Queensland's boiling pot. No, it wasn't that I saw, but it was just the next. Oh, here it is. Bank of Queensland to cut 400 jobs as part of restructure. So obviously, that's why the share price is down today. And you can just see below that, Insignia Financial Swings 4-year to loss pauses dividend. That's why their share price was down a fair bit yesterday. So anyway, I really completely missed Bank of Queensland. I'm shocked because share price was down 7%. It could have been that when I did the video, the share price wasn't down all that much. So if you have a look at, say, the 5-minute chart, there is a chance the share price took a massive dive when I was recording. Yeah, so I started recording maybe at 220, and the share price, fell a fair bit. Look at that. That's a horrendous one-day chart. Selling was dominant all through the day. The day finished, selling came to an end. Almost immediately. It's weird. So it's Bank of Queensland. Completely missed that yesterday. It doesn't really matter. Don't like banks. Boom Logistics. This is an interesting one. This one has come up to my radar numerous times recently. Share price moving to an uptrend. Fairly slow moving uptrend. As you can see, share price just going up and down by little increments, just grinding its way higher. They released their results today and profit of $6 million from a loss. I'd say this company is fairly cyclical. A market cap of 61 million. So the PE ratio of this company, based off their profit in the last financial year, the PE ratio is like 10. And the share price is up to 16 cents. So a high of 16 cents. So the chart looks pretty good. But when you look at the weekly chart, you can just see the share price of this company just If you just zoom in a little bit more, over the last 10 years, up and down like a yo-yo. This is not the chart of a high-quality company. So more like the chart of a cyclical company. So Boom Logistics, I don't even know what they do. For some reason, I have ANZ. Why do I have, oh, what happened, ANZ? Share price down? Why did I put ANZ? I forget. I completely forget. And banking. I was talking about, I have no idea why I put ANZ there. I've completely forgotten. Laserbond. That's the weekly chart. Ooh, Laserbond is getting to a very important level. Ooh, it's around about 65 cents, and it's right on 65 cents. They did release their results today, and I got out of Laserbond quite a while ago. I'm trying to remember when I got out of Laserbond. It would have been back around about February after their results then. I thought they were pretty weak. These results were pretty weak as well. I don't think this would be in. Capital Brief. I don't know, because they only talk. It seems like they only talk about the bigger companies. It seems like anyway. Anyway, what would it wouldn't be? I don't know. Anyway, the results were weak on the surface, but just because they're weak on the surface again doesn't mean that's how the market's going to react. But yeah, the share price is down a fair bit today, so the market hasn't liked Laserbond, and to be honest with you, the chart looks pretty weak as well. So I do like the potential of Laserbond, but I'm on the sidelines right now. And if I do see the share price fall, I'm not sure what level. We'll have to do a little bit of work. But if I do see value eventually, I might take a position in Laserbond. We'll talk about that company last. Harmoney. I think the market got this one was wrong as well. Share price down a fair bit yesterday. Oh, I see. There's a little bit of illiquidity when it comes to Harmoney, but the share price down 18%. Just had a look at it. I had a quick look at these results and I moved on fairly quickly. Didn't want to delve too deeply because the company is not profitable. That's the first thing I noticed, and I just moved on. Moved on to the next company. I think there is going to be value in this space. I'm assuming they are a lender, probably a small lender, to not home lending or anything like that. Engages in provision of lending services. Enterprise says a peer-to-peer lending marketplace. I knew that was something to do with lending, but not that sort of lending. Anyway, look at the weekly chart. Looks horrendous. Share price has dropped from about 350 down to 50 cents. And the daily chart doesn't inspire me just yet. So no for Harmoney, and plus the share price is down 18% on their results. FOS. So this will be the second last. Pretty sure I haven't missed anything. FOS. This one is a maybe exciting one. Share price is up 8.7%. A lot of illiquidity in this, or illiquidity, and you can just see that by the chart here. This is the daily chart, and just nothing has happened since they listed back in 2021. Share price, it's all over the place. But this company is profitable. It's a small company, profitable company, market cap of 12.4 million. I don't think their profit was that big, maybe $1 million or just less than $1 million. But they released a presentation. Have a look at that presentation. Let's have a look. In fact, we'll have a look at the Appendix 4E. Should open up pretty quickly. Nice increase in revenue, if I remember correctly. Yes, revenue up 43%, profit up 8%, but only up to 632,000. So this is a small company. And according to this, they give a dividend. They pay a dividend. This is a profitable dividend-paying small-cap company on the ASX. I'm pretty sure they have something to do with lights. They sell lights. I'm pretty sure, something like that. We can have a look at the presentation. I have a little bit of time. I've got one more company to talk about and then two charts to look at, Bisley and BlueScope Steel. I'm pretty sure they sell lights. Here we go. FOS manufactures and distributes commercial and architectural LED lighting, or LED lighting to the project specification market. TAM of 500 million. Seems like a small potential, but it's there. And it's a small company. So there could be value in this. This is a small company I'm always looking for, but not the most exciting company. but it's still a possibility. And finally, Redflow. I think it's Redflow. Batteries. Voluntary administration. This is a sad story. I've been following this company for 10 years, over 10 years. They always seem to have some good potential. And this was a sorry case of sometimes you need luck and timing when it comes to these sort of companies. And they mentioned they needed some funding for this, what was it, some sort of factory. So a larger scale X10 battery manufacture at scale. So they need money to do that. They were proposing a new factory built and commissioned in Queensland to manufacture these batteries, but it required significant capital. They would have gotten government support on the proviso that they received matching funding from the Australian capital markets. And the Australian capital market said, nah, sorry, we don't want to give you any funding. And they've gone into voluntary administration because of that. So it's a sad day for Redflow. There's a chance, who knows, it may come out the other end, may not. And so this is a company I've been following for a long time, but I've never bought a position in this company because it just wasn't there. They never got there. And just look at the chart. This is another chart where if you're just trading, there would be no reason to be even thinking about buying shares in this company. So the only reason you might buy shares in this company because you thought it had potential. But this should show you the risk of that sort of strategy. Potential doesn't always mean the company is going to make it. And I'd say the majority of companies that show potential never make it. In fact, the share price went into a downtrend in December 2021 at a share price of 56 cents. Now the share price is 9.7%. 9.7 cents. Look at the weekly chart. Yeah. Bit of excitement in this company back in 2016. Don't remember when. I followed this company or started following this company way back in 2012-13. Anyhow, so that's a sad story on the ASX. Okay, so let's have a look at a couple of charts before we leave. Bisalloy, share price just keeps on dropping. Something to do with a weakness in the steel market, still something. In fact, this week, Bisalloy share price just this week has dropped 31.75%. They have not released any news. They just released a price and volume or response to price query. That's it. So this is just on micro or macroeconomic things. But if there is this perceived weakness in steel industry, then you would expect BlueScope Steel to drop as well. Maybe I am just ignorant. So let's have a look at BlueScope Steel. What is it? BSL. It is BSL. And in fact, BlueScope Steel share price has risen this week by 1%. Is there a bit of irrational behavior from the market here? I don't know. I just don't know. I'm not a big expert in steel. Maybe there's a big difference between BlueScope Steel and Bisalloy Steel. But is the market overreacting because Bisalloy is as little or is a smaller company than BlueScope? There is that possibility as well. And maybe the market is right. Maybe we should have concerns about Bisalloy Steel. I don't know. So if you do know, or you just love to leave your thoughts, your opinion, leave it in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.